Okay, the very last part of this might be a letdown because it's not as intense as the MPV. So we're going to look at the accounting rate of return, and we're going to look at the how to calculate the internal rate of return. Both of them are very easy to do. I just want you to be acquainted with them in case you hear somebody talk about them or you need to calculate them. So first of all, we look at a machine's accounting rate of return. It costs 700,000. It has a useful life of 10 years. It has an income over that time of $52,000, and it has a salvage value of $100,000. So to calculate the rate of return, accounting rate of return, I'm going to take the annual after-tax net income of 52,000 and divide it by the annual average investment. And what does that mean? That means I paid 700 for it, and I'm going to add to that the salvage value. So it comes up to, it's worth 700,000 here, it's worth 100,000 at the end of 10 years. So its average investment is adding those two together and getting an average, and that average would be $400,000. Then it's a simple matter of dividing uh, 52,000 by 400,000, coming out with 0.13 or 13%, or you can have it make it look like this. I'm not sure if that's an even amount. Yeah. So it's a 13% of return. So very quickly you can kind of analyze what kind of return you're going to get from that. The other one is called internal rate of return, and it is really difficult to calculate if you do it by hand because you just do back and forth until you find the approximate rate of return. And this is where uh, Excel becomes really handy because if you look at it, it has a built-in factor of the IRR. And all you have to do is use the function. So what do you have to set up? The initial investment and each year's return on that. Then type in equal IRR in a parentheses and simply select that range, and it will give you the rate of return, the internal rate of return. And sometimes that's a quick and dirty, easy way to calculate how you what the return is. Another way of doing it, you can do and then compare. So if I do an equal IRR for that bottom line, select it and hit enter, I come up with 13%. So I can compare the two very quickly um, without doing a great deal of calculations. So that's the accounting rate of return here and the internal rate of return. And that concludes capital investment. Thank you. I think you'll have fun on the homework.